Russia isn't just fighting a war, it's fighting its own currency. Every single month, billions of dollars are being spent just to stop the ruble from sliding further. On the surface, the currency looks stable. But underneath, the cost of holding it there is exploding. And that's where the real pressure begins. Here's why this matters. When a government spends billions just to defend its currency, that money isn't going to growth, infrastructure, or reserves. It's emergency spending. And in Russia's case, that emergency is colliding with massive war costs, rising budget deficits, and shrinking financial flexibility. Right now, Russia's central bank and finance ministry are pulling multiple levers at once. Currency interventions, capital controls, and interest rate pressure, all designed to project stability. But stability maintained through force is expensive, and over time, it becomes harder to sustain. In this video, we're going to break down exactly how Russia is defending the ruble, where the money is coming from, and why this strategy is creating risks that don't show up in official headlines. Let us start with how Russia is actually defending the ruble, because this isn't happening naturally. The first tool is direct currency support. When pressure builds, Russian authorities step in to support the ruble by managing foreign currency flows and limiting how much capital can leave the country. That creates the appearance of stability, but it also means the currency is being held in place, not supported by market confidence. The second lever is interest rates. Higher rates can slow capital flight and encourage ruble holdings, but they come at a cost. Borrowing becomes more expensive, investment slows, and economic activity takes a hit. Over time, that trade-off adds pressure elsewhere in the economy. And then there's the most expensive lever of all, state finances. As war spending rises, the government needs more rubles at home, which increases stress on budgets and reserves. Defending the currency while financing a war forces hard choices. Either spend more to hold the line, or accept a weaker ruble and higher inflation. None of these tools are temporary. They have to be used again and again, month after month. That's why the cost keeps growing, and why defending the ruble is becoming one of the quietest but most expensive parts of Russia's economic strategy. Now let us talk about scale, because this is where defending the ruble stops being abstract and starts becoming expensive. Even conservative estimates suggest Russia is committing billions of dollars every month through a mix of currency support, financial controls, and fiscal pressure. Some of that cost is visible, some of it isn't. But together, it represents a significant and recurring drain on state resources. To put that in context, this level of monthly spending rivals what Russia allocates to major domestic programs. Money used to stabilize the currency is money that can be used elsewhere, not for infrastructure, not for long-term investment, and not for building reserves that actually absorb shocks. The second consequence is policy distortion. When currency defense becomes a priority, economic decisions stop being about efficiency and start being about control. Capital controls stay in place longer, interest rates remain higher than normal, and private investment becomes more cautious. That doesn't trigger an immediate collapse, but it does slow growth and raise fragility. And the third consequence is risk concentration. By spending heavily to hold the ruble stable, the system becomes more sensitive to shocks. If export revenues fall, if sanctions tighten, or if war costs rise further, the margin for error narrows quickly. At that point, defending the currency becomes harder and more expensive at the same time. When a country spends heavily to defend its currency, the effects don't appear all at once. They surface in layers. The first place pressure shows up is inside the domestic economy. Higher interest rates make borrowing more expensive. Businesses delay investment. Consumers pull back. Growth doesn't collapse, it thins out. That matters because slower growth reduces future tax revenue, which tightens budgets further. So the very act of defending the ruble today can weaken the economic base that has to support it tomorrow. This is where the illusion forms. The ruble looks stable on charts. Inflation appears contained. Financial headlines suggest control. But stability achieved through intervention isn't the same as stability built on confidence. Markets can stay calm for long periods, until they don't. And when stability depends on constant action, even small shocks carry more weight. That's when costs accelerate. One of the biggest risks with currency defense is that it becomes hard to stop. Once controls are in place, lifting them too quickly can trigger capital flight. Once markets expect intervention, the absence of it becomes a signal. And once spending rises to defend stability, backing off can feel like surrendering it. That creates a policy trap. Not because the strategy fails immediately, but because exiting it becomes riskier than continuing. A sustained increase in export revenues would help. Lower war-related spending would ease fiscal pressure. A shift in external constraints could reduce the need for heavy intervention. But without those changes, defending the ruble remains a recurring cost, one that competes directly with other priorities. And the longer that competition continues, the fewer easy options remain. It's important to be clear about what this isn't. This isn't a prediction of sudden collapse. Economies under pressure often adapt. They stretch, they redirect, and they survive longer than many expect. The issue isn't survival, it's efficiency. Resources used to defend stability are resources not used to improve resilience. Over time, that trade-off reshapes the economy in quieter, less visible ways. Currency defense during prolonged stress doesn't just affect exchange rates. It influences how capital moves, how businesses plan, and how policymakers respond to future shocks. When stability depends on constant intervention, flexibility shrinks. And when flexibility shrinks, mistakes become more costly. That's why the ruble's current calm doesn't tell the full story. The cost of maintaining it does, so the real question isn't whether Russia can keep defending the ruble this month or even this year. The question is whether spending billions to preserve short-term stability creates longer-term vulnerabilities that surface elsewhere, in growth, in fiscal balance, or in future crisis response. That's the real issue. It's not whether Russia can defend the ruble this month. It's how long that defense can continue before the trade-offs start to outweigh the benefits. So what determines how long this strategy can last? It comes down to three things: revenue, discipline, and external pressure. As long as export income remains strong, Russia has room to keep defending the ruble. But if revenues soften, whether through lower energy prices, tighter sanctions, or reduced demand, the cost of maintaining stability rises quickly. The second factor is fiscal discipline. War spending is inflexible. Currency defense is reactive. When both expand at the same time, budgets lose breathing room. That doesn't force an immediate breaking point, but it does limit options. Over time, policymakers are left choosing between higher inflation, slower growth, or deeper financial controls. And then there's external pressure. Markets don't move in straight lines. A single shock, a policy shift, a geopolitical escalation, or a sudden revenue drop can change the cost of defending a currency almost overnight. When a system is already spending heavily just to stay stable, those shocks matter more. That's why the ruble's stability shouldn't be confused with strength. A currency can look calm on the surface while requiring constant intervention underneath. And the longer that intervention continues, the more expensive it becomes. The bigger question isn't whether Russia can defend the ruble today. It's whether defending it at any cost creates vulnerabilities that show up elsewhere in the economy tomorrow. If you want to understand how war spending, sanctions, and financial controls are reshaping global economies, stay with the channel. In the next video, we'll look at where this pressure could shift next and what happens if the tools holding the system together start losing effectiveness.